Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. Just call us 800-306-1990, 800-306-1990. S&P 500 now up 20.81. Let's take a look and see what the mortgage-backed securities are doing. They're up 5 basis points. 10-year Treasury is down 1 basis point. 10-year Treasury is moving right at a very, very strong technical area. And again, as I mentioned, a lot of these things don't matter a whole lot until we see what the Federal Reserve does today. But sometimes the technicals will hold and give us some guidance. And we're watching right now, we're sitting right there on that 100-day moving average. We've been fighting that all along. I'll talk about that more in just a second. But right now, every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. Yesterday, the loans locked 30-year conforming at 6.303, jumbo 6.241, FHA 6.286, USDA for those in the rural areas and generally no down payment. That was at 6.325, and the best loan on the market for those that earned it. That would be the VA loan, 6.041. The question is, why are the numbers moving the way they are? Well, I told you a little bit. Has to do with, we got the great inflation numbers yesterday, and we've been telling you for the last 7 or 8 months that right now is about the time, last month, this month, is when inflation was going to already peak out and turn around. And we saw that. I hope the Federal Reserve will tune into our broadcast so they understand. You know, they've been a little off on what these markets are doing. We told them it was not going to be transitory, this inflation. And we also said when it was going to start dropping, because you just look at the monthly charts. It's pretty simple right there. So what are we going to see today from the Federal Reserve? Again, predictions. It's not going to come out. Well, if you're listening to us live on radio this afternoon, you'll be able to say, Ron, you told us, or you'll be able to say, laugh at me. Now, look at that guy, didn't know what he's talking about. Either way, I'll be here tomorrow. Fed's going to hike interest rates 50 basis points today. That's the Fed funds rate. That does not have anything to do with mortgage rates. Generally, at this time, when we're at this part of the cycle, mortgage rates will generally move the opposite direction of what the Federal Reserve does. Fed acknowledges the improvement in inflation, still takes a tough on inflation and their commitment to bringing it to their target, but sounds hawkish in this scenario. The markets will rally. That's what will happen there. Fed wants to bring the market lower and cause pain. They've already told us that. They want to see more people unemployed. They want to see the market slow down. So we'll see if they do that. Remember, even if the Fed statement is favorable, there's always the risk that Powell will ruin the party when he starts talking. We want to hear their thoughts on future hikes with their next meeting February 1st. For now, the futures market is pricing in a 25 basis point hike for that time. Mortgage Bankers Association. Yes, I know we got some people that are telling us how great how the mortgage world is just collapsing. But let's take a look at this. Purchases rose 4% last week. They're down 38% for the year, but we're starting to see that turn. Purchase applications are now up 5 out of the last 6 weeks. Interest rates remain pretty stable in the Mortgage Bankers Association world. And we're going to look at also, I think I have refinances rose 3% last week, down 85% year over year, 85%. Again, remember the Ron Siegel Radio 2-step, right? It's still a great time to take a look and see what your total family finances are. Cass Freight, no one talks about this one. You've probably never heard of it unless you are a Ron Siegel Radio listener. So Cass Freight, this is an index that looks at planes, trains, and automobiles, how you're getting things shipped. And the expenditures component of the Cass Freight Index, which measures the total amount spent on freight, rose 1.8% in November. On a year-over-year basis, the index decelerated from 21% to 11%. In October to now, it's up 4.7% in November. So basically what we're seeing in this index is because of the fuel costs dropping, well, people are starting to ship and their prices of shipping is dropping. So that'll be more good news for inflation. Just throw that out there for you. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.